Okay, thanks very much. We are Alexco. The primary asset we have, of course, is the Keno Hill Silver District in the Yukon Territory of Alaska. We've got our safe harbor statement that you all know and love. So we are making a transition from explorer developer to developer producer. As we speak here, we will be a high-grade silver producer in Canada in 2019. Our head grades are more than 800 grams per ton silver. We're currently in development. It's about 50% complete at the present time. All-in sustaining costs, once we're online, between $9.5 and $10.5 for the first 3 years, so very competitive. $27–30 million of capital, Canadian. A lot of scalability in the district. We have a 400 ton per day mill. We have lots more tons and ounces than we have in the current plan. We've been very successful on the exploration side, being able to put ounces on the books for about 50 cents an ounce. And of course, we are a primary silver producer. And so we're part of a dying breed. There's not too many of us left. Most of them have diversified at this point. It's my view that we're better off to stay sole source to Keno Hill, very high grade, highly leveraged to the price of silver. This is the district. It's about 400 kilometers north of Whitehorse. We own the entire district, 100%. Had 200 million ounces of production historically, an average grade of 40 ounces a ton, so that's something like 1,300 grams per ton silver. 4 deposits that we're focused on here, the most important of which are the Birmingham and Flame and Moth deposits. We previously produced from the Belkino deposit down there in the bottom right-hand corner, a couple million ounces of silver per year, and through the 2010-2013 period. So with Birmingham and Flame and Moth coming back on stream, we'll be producing on average 3.5 million ounces of silver a year, more than 4 million ounces in the first 3 years of production. And looking to expand that through additional work. So this is what we're aiming for. This is what's in the mine plan, 1 million tons of material. Average grade, as I mentioned, of 800 grams and with about 7–8% combined lead zinc. The great majority of that feed comes from the Flame and Moth and Birmingham deposits you see there. They'll be feeding at a rate of about 300 to 350 tons per day from Flame and Moth. 100 to 150 tons a day from Birmingham. That gives you that combined grade of around 800 grams there. This is a schedule that's currently underway. We have about 1,500 meters of underground development to do. That's about 50% complete. Most of that's in 2 separate deposits, and most of it's in driving decline and getting initial levels ready for production. One of those declines is complete at the present time. We have 2 drills underground working at the present time to drill off that Birmingham deposit on 10-meter centers. We're uploading all of that stuff into a pre-feas, so we'll convert to proven and probable here in the 3rd quarter of this year. We have a refurbishment program underway in the mill, conventional flotation mill. We're proceeding through the permitting process with the last deposit to be permitted here, and would anticipate making a production decision, committing to smelters in the 4th quarter of this year and being in production the 1st quarter of next year. This is what the production profile looks like, better than 900 grams per ton silver in the first couple of 3 years, $9.5 to $10.5 per ounce all-in sustaining costs. As you see there, sustaining costs are a pretty squishy number, not identified in any accounting standards. So I try to build up the sustaining costs here. You've got about $9–9.5 of direct mine costs and processing costs. You have smelter costs that go on top of that, TCRCs to build up that $9. You have a net back of about $7 from the lead and zinc, which are byproducts here. And then the build out through a wheaten stream. We have a wheaten stream, 25% of the silver, and then through site G&A, overhead, corporate G&A, and exploration. A couple of schematic sections here just to show what these things look like. The Flame and Moth deposit's about 1.5 million tons of 500-gram material. Of that, 800,000 tons in the existing mine plan. Current mine plan, better than 600-gram material. That decline from the mill is underway as we speak. We're about 40, 50 meters into that decline, 600 meters to be driven, should be down there probably in November of this year. The other deposit, the one that's attracted a lot of attention, was the discovery of the Birmingham deposit. This is currently sitting about 850,000 tons of 600-gram material, so the grade here is about 20% higher than Flame and Moth. This is a deposit that did not come to the surface. It's a blind discovery, a very good discovery, and then within that, we have about 200,000 tons in the current mine plan at a grade of about 1,200, 1,300 grams per ton, and that's diluted about 30%. So very high-grade deposit, and because of that, we have a couple of drills at the bottom of this decline at the present time, drilling about 5,000 meters. We'll try and drill off the first couple of years of production here with 10-meter spacing, so that we can properly design to extract the maximum value from this very high-grade and valuable resource. Conventional flotation, we produce a lead concentrate and a zinc concentrate. 85% of the value is in the lead concentrate, which is about 65% lead and will be more than 16,000 grams per ton silver. There is no other product on the market of this type. It's a miner's market for smelters. And so we're attracting a lot of attention from smelters around the world, traders, and primary users, actually. Exploration, 70 million ounces on the books indicated at this point in time. Another more than 20 million in the inferred category, so we're sneaking up on 100 million ounces in this district at the present time. Discovery costs 50 to 55 cents at inception to date. So pretty difficult to convince me we should be doing anything other than continuing to put ounces on the books in this district. We do have a little breathing room here. We've made a couple of major discoveries. We've spent a lot of time drilling those off. So this year we're going to expand our exploration program as well as moving this district towards production. And drill some other what we call Birmingham-style targets. These would be 20, 30, 40 million ounce type targets, and also start drilling some deeper holes in the district, looking for the higher grade, more base metal rich deposits that we know exist in this district. So the biggest deposit in the district was 90 million ounces, and it's a total blue sky statement, but there's no reason that there wouldn't be more of these deposits in the district. We also run another business that's called Alexco Environmental Group. This has been very successful. This business right now has more than $200 million of contractual backlog. Did about 11 million of revenue top line last year, maintained 35, 37% margins. I think you'll see that number growing very significantly in 2018 and again in 2019. So a great business, produces cash, and actually strategically lets us look at projects that other people don't normally see because they're disguised sometimes behind environmental projects. So financials, we just closed on, we just did a financing for some flow-through financing to pay for all this exploration. Closed yesterday, so we're sitting $25, $26 million on the books at the present time. A number of analysts that are following us, and finally just the near-term catalyst, of course, and completion of that underground drilling. 5,000 meters, we're going to do 15,000 meters of drilling on the surface in 8 or 10 different targets that we have. Flame and Moth decline will be finished in November. We'll have this pre-feas that we'll upload everything to in the third quarter of this year. And we'll be moving forward and hopefully completing the permitting in the first quarter of 2019, just prior to moving into production. So that's it. Any questions? 41 seconds. Thanks a lot.